So how do commercial construction loans work? You know, I could probably spend 20 videos talking about this process, and maybe I will someday. But this video is going to generally go over how a commercial construction loan works. First and foremost, the bank will generally loan up to 85% of the cost of the total project, so think your budget, and 75% of the final value of the project. So when we get your budget, we go out and get an appraisal and we see what the value of the property will be at the end of its project. Now, the remainder in there is going to be your down payment. Your down payment can come from your cash, or in most common situations, it comes from the equity within the land. So generally, you will purchase the land on your own using cash, and then that equity within that land goes towards the overall project. So if you bought a piece of land for $600,000, that $600,000 is equity in your overall project. Other things we look at, credit must be very strong due to the amount of risk that are on construction projects. So we do look for 700 plus with no blemishes. We're also looking to see if you have experience in either building that type of project before, or your general contractor, or for example, if it's a multifamily project or an industrial or whatever kind of building you're building, we need to make sure that you have experience within that property type. So if it's multifamily, we want to make sure that you've owned multifamily before you start constructing one on your own. A common question that I get asked is what kind of net worth is required? It's very wide open because it really depends on the project size and scope, but generally $750,000 in net worth or higher would be the minimum. We're also looking, when we're doing the underwriting, for reoccurring stable cash flow. Of course, the property itself is going to generate income, but we need to make sure that there's outside income as well when it comes to maybe you work and have a W-2 income, maybe you have other rental properties. We need to make sure that you have other income that's coming in from outside of the project. And the reason for that is we also want to make sure that you have liquidity and cash in the bank. So if there's any ever overruns on the property where, you know, your electrical got way out of whack and you've used your contingency, which is usually 10% that's a part of your budget for overruns and we'll call it accidents. The bank doesn't want to provide more than, like we talked about, the 85% to cost or 75% to value. So we're going to want for you to come in with that extra cash. So we need to make sure that you actually have that cash and income on the side. The structure on a construction line is anywhere from 12 to 18 months. We give you a line of credit, and you could go ahead and provide once a month generally. You provide us your bills and the construction budget. We have an individual go out, take a look at the property, make sure that the windows are done because that's what you're wanting to get paid, the foundation's poured, whatever you're wanting to do on the budget. They go out, they make sure that it's done, they authorize it, and then we go ahead and put the money into your account for that month's draws. Another thing that we will do occasionally as well within construction projects is what's called a plan review. A plan review is where they actually take your budget and your description of materials, and somebody with very strong experience in the construction will take a look at the project and make sure that your plans and your budget is feasible for the project you're trying to accomplish. Another important thing for you to know is the difference between hard costs and soft costs. Hard costs are obviously hard costs, things you can touch. That's your lumber, that's your concrete, that's your electricals or things you can touch. Soft costs are architectural, plans, permits, all of those things that probably got you before the actual construction phase. Now, the good news, all of that can be put into your project, but you definitely need to understand the difference between hard costs and soft costs. So again, at the very end, we're going to want to see a budget, a description of materials, so we know if you're building the Taj Mahal or are you building something that's basic, so we can come up with a value. And then we can take a look and see if the project is doable. Any other questions? And when it comes to construction lending, I have a guide on my website to construction lending at www.paultlong.com. Thank you.